Well, welcome back, everybody. I hope you guys are having a great week and went ahead and we're focusing on the strategies I shared with you last week about taking some of that risk off on the swing trading basis, with the exception of very select items, so we could go ahead and rest well, kind of given all the turmoil, economic, political, military around us. So, if you recall, last week when we were sitting here, what happened was we were in this area and I was concerned about Jackson Hole Friday, and of course what was going to happen into the weekend and beyond with Afghanistan. So the best thing to do was to flip to a little bit more of a risk-off type scenario, especially in light of the fact like we have negative divergences here. You'll see on the SPY and on the diamond, it's not a negative divergence, but in the way it is a divergence in its own right, which is here we have the SPY pushing up here, but we do not have the Dow going with it. So you'll notice you're making higher highs on the SPY, but you are not making it on the Dow. So in its own right, the price action itself is a negative divergence. So we don't like to see them, separating like that. Something's got to give. Either the S&P is going to push down here, or the Dow's got some real work to do to catch up, and then it's got to break above the previous highs here. So you can see with that kind of risk on, as I mentioned, this is one of those times where it makes a lot of sense to even look at intraday opportunities. So you can see here with a tool called my Trade Rescue package, which is just a very straightforward type of tool, has an entry, has a stop loss, has a target 1, and then a target 2. You can see it here. We had a nice run on this, the S&P this morning, but then I got caught at target 2, actually went to a sell side then, and started rolling over. And then speaking of that rollover, let's take a look at that closer here. So then you can see in the afternoon we had the sell-off that got all the way to target 2. So there was opportunities on both the long side and the short side. If you have other tools like my ITP and that, you had some nice information to go and tie in with that. But on the even on the basic important strategy tools like the TRP, it opened up a lot of opportunities to the long side in the morning, the short side in the afternoon, without going in and having to worry about that overnight risk of the negative divergences. Now, as I've been saying, when we get into a high risk area for some reason, maybe we've started to go down below the speed lines and are testing the channel, so it's making it more aggressive, and that, as I mentioned, the best way from my perspective to find opportunities then is to go over to like Wealth Scanner and take a look at what it is firing off here. And even as we go ahead and we look, we can see the same kind of thing. If you have my ITP tools, you can see some great entry signals and some continuations there. You had some throttling here, which means that if we have that throttling here, those of you that are familiar with my work know what I mean, that after a pullback, we're expecting a higher high. Now, it's currently doing that with a negative divergence, but that being said, if we look to the TRP went ahead, had that singular entry signal. Went ahead, it had the stop loss. It did not go back down below the stop loss, and it blew right through target 1 and target 2, pulled back, and that's where you get those runaways, which is kind of what's been happening. So no matter how you slice it, the point is, and by the way, if you've been watching Wealth Scanner at all, you know every day, day after day after day after day after day after day, you're seeing things like Team Regeneron. When I did the ITP training event there a week or two ago, you recall Regeneron was there. We talked about it then, and of course, Regeneron is still off to the races there. But the point is that if you're going to dabble with the swing trade side of things right now, the best thing to do is stack as many probabilities as you possibly can in your favor and focus on some things that are really objectively, algorithmically ranked very high from my perspective, to help to offset some of that risk. But just to bring it back full circle, there is a lot of risk right now. Where we're at effectively after the last several days, we pretty much haven't gone anywhere. There was a sigh of relief from Friday to Monday because the world didn't blow up theoretically. There's a lot of people, though, that suffered great losses. Trying to avoid the political side of it, the reality is that there's a lot going on, right? On the political side, the military side, just all these different things kind of take place, and there's a lot of risk in this market. Somebody, when the market gapped up this morning, took the opportunity to use that as a sell. Same thing with the Dow. Somebody's going ahead and selling at these areas, and I don't like the fact that the Dow is not keeping up with the S&P. Something's going to have to give. One's going to have to go up, or the other one's going to have to go down. So because of that risk, that's why either focus on statistically very high probability algorithmic opportunities, or go ahead and bring it into the intraday perspective and look for those short-term longs like this morning. There was a nice run this morning to the upside and or to the downside here looking into the afternoon. Wonderful opportunities to take advantage, enter the market, get out, and sleep like a baby at night. So this strategy that I laid forward for you, earlier last week continues to go ahead and be a solid strategy that's kind of following through in the here and now. So that's the update as we go ahead and stand. I'll try to keep you guys updated in the coming days with additional videos. All right. Thanks a lot, gang. You guys have a great night. We'll see you soon. Take care, everyone. Bye-bye.